Very well, welcome at Commodity TV. It's company presentation time. Ladies and gentlemen, Avanti Energy is an oil and gas exploration and production company out of Canada. The company is listed at the TSX Venture under the symbol AVN. And the company has 47.1 million shares outstanding and on a fully diluted basis, 50.2 million shares. The market cap is at approximately 14 million Canadian dollars. The management team around CEO John McIntyre has combined over 200 years of experience in the global oil and gas markets in over 20 countries like Colombia, Brazil, Argentina, Peru, Venezuela, and Mexico, and many more. With Sierra Hamilton, the company has a fantastic strategic technology partner with more than 750 independent consultants for all belongings in the oil and gas sector. The company's strategy stands on two columns. What are those two columns now? Joint ventures and acquisitions, as well as active field development and EOR. They plan to buy into producing assets with proven but undeveloped resources and drilling upside. Also, the company wants to establish joint ventures with established players in Brazil and acquire an operating company or significant producing assets in Colombia. Let's talk first about Brazil. What are the highlights? Currently, the emphasis by majors and of course also by Petrobras is on offshore development. This may provide for smaller players a substantial opportunities with the highly attractive conventional onshore potential in mature basins with proven production history. Over 29 sedimentary basins with oil and gas potential equal in size to 10 times the area of Texas exist so far and deliver an established and prolific production history. We talk about 2.75 million barrels of oil equivalent per day in 2012. A favorable fiscal, regulatory and operating environment helps a lot too. Let's come to one of the basins. The Recon-Savo Basin has a size of over 10,000 square kilometers and produces oil since 1939 with currently 41,000 barrels of oil per day. Avanti wants to acquire underexplored but mature onshore fields and optimize them through employing well-established enhanced recovery and rehabilitation technologies to receive in a short time cash flow. Next part of the strategy is Colombia. There you find world-class onshore source rockets and reservoirs with attractive unconventional potential, high netbacks and underexplored and low development risk. The attractive fiscal and regulatory regime is favorable to investment. In 2013, the expected production was 1.3 million barrels of oil equivalent per day, and this was delivered, of course, in Colombia. This is a favorable environment for small independent E&P companies, meaning exploration and production companies. Targets are new blocks with La Luna resource potential as an acreage play, and the conventionals still offer the attractive risk-adjusted returns. Avanti evaluates the ANH 2014 tender for new blocks and for discovered and undeveloped blocks. Colombia's infrastructure, tax royalty regime, open markets, short time to payback and the great potential both for development and new discoveries makes it an attractive target. Avanti Energy plans to acquire or even farm in of producing assets held by other companies at reasonable prices, grow production through field development and field rehabilitation practices, targets low-risk assets with production upside and wants to grow the production by 2 or 3 times within 3 to 4 years. Avanti is currently evaluating large acquisitions of producing assets in Colombia. Let's talk about the USA now. Core area of interest is Louisiana onshore, and here the Koch field trend with light oil at moderate depths and an abundance of data and infrastructure. Partnering works with Avanti Exploration LLC as an operator. There are multiple analogous drilling opportunities in the pipeline. Recently the company established a 50+ barrel of oil per day production in 2 wells in Beauregard Parish in Louisiana. They want to build cash flow to grow the company and meet G&A needs while seeking to close a large acquisition in Latin America. In the USA, the focus is on feed revitalization studies through a combination of well production histories, drive mechanism, water production, artificial lift and optimization, jet pump and ESPs as appropriate of course, sand control, gravel packs, perforations, corrosion inhibition and much more. Key question is now how to finance all. A first target is for an acquisition around $20 million and then a larger acquisition afterwards of $100 million. For the small amount of $20 million, they seek equity and maybe other forms, and for the large projects, the company wants to do private equity. Important is that Avanti is debt-free, and through the cash flow from the USA, the normal expenses like G&A should be covered then. Well, why you should have a look at Avanti? That's always the key question. An experienced management team with a sound strategy, good geography and geology, as well as excellent fiscal terms. The company builds a production base in the US while posturing to close on large development-oriented transactions in Latin America. Strong preference to project finance, large acquisitions through private equity, and of course reduce dilution to shareholders. And remember, the company is debt-free. That's why we think the company is attractive and worthwhile to do some due diligence. Have a look at it. Thanks for watching Commodity TV, and bye-bye from Munich.